Hello, my name is Alexander Warstler. I typically cover domestic healthcare. However, for this pitch, I'm going to be pivoting to domestic industrials. Today, I'm going to be pitching Iteris, ticker ITI. Iteris is the global leader in applied informatics for both the traffic management and global agribusiness markets, turning big data into breakthrough solutions. ITI operates through three main segments: roadway sensors, which represents approximately 43% of fiscal year 2019 revenue; transportation systems, which accounts for 51% of revenue; and agriculture and weather analytics, which approximates 60% of revenue. The roadway sensor segment offers products for traffic intersection control, incident detection, and traffic data collection tools. The transportation systems segment provides engineering and consulting services. The agriculture and weather analytics segment consists of ClearAg and ClearPath weather management tools, which deliver road maintenance and digital agriculture applications. Iteris was founded in 1969 and is headquartered in Santa Ana, California. North America's transportation system is facing extreme pressure to reduce traffic fatalities while at the same time find innovative solutions to combat congestion and greenhouse gas emissions. Agencies are beginning to understand that it is critical to connect the roadway infrastructure to the cloud so that they can utilize technology to understand how to maximize safety, minimize congestion, and enable vehicle to infrastructure integration. Iteris is the market leader in the space and has the most future-ready product and service portfolio, leveraging over 10 years of experience managing the United States Department of Transportation's connected and automated vehicle reference design architecture. In addition, ITI's products and services can be bundled together to create end-to-end solutions connected to the cloud. So, Iteris has a very robust competitive moat through their expertise in informatics, their ability to collect data through their sensors, then analyze that data through their SaaS platforms, and create actionable insights for all these agencies is driving strong double-digit revenue growth, and approximately 25% of the company's revenue is recurring in nature. The business model is highly scalable, and their cloud-based model allows for expanding future margins. When we look at that margin expansion, one of the ways in which they're going to tackle this or gain margin expansion is not only their SaaS initiatives, which are very high margin, but also scale. When the bookings have gotten much larger over the past 4 years. 4 years ago, their average deal size was approximately $50,000. Today, they're signing multi-million-dollar deals. So we're talking between $1 and $4 million. What this does is allows them to better utilize their workforce, and so instead of reallocating staff to smaller work projects over a long period of time, they can staff the larger projects and gain operating efficiencies through that. When we look at it, also you get improved revenue predictability out of the SaaS revenue model, and there's going to be positive cash flow from operations in fiscal year 2021 for the whole company. In addition, Iteris received a new CEO in December of 2019 who is going to create more operating leverage in the P&L through keeping G&A expenses relatively flat, while you're going to see increase in margins and revenue growth going forward, which will drop down significantly to the bottom line. Then when you look at they have a very asset-light business model, approximately $400,000 annual CapEx every year, and that's very low for a business. When we look at the transportation systems business, although the majority of past growth has been organic, ITI recently completed an acquisition of Albic Gherkin in June of 2019 to expand their strategic footprint in Florida. Florida is the third largest smart transportation and TAM, total addressable market, in the whole U.S. aside from California and Texas, which are also major markets in which ITI is our market. Iteris is the market leader in. And this allows them to leverage their innovation and their SaaS platforms and go after a bigger geographic market and with stronger customer relations. And then when we look at the roadway sensors business, they have approximately 50% market share in the roadway sensors business, and they're gaining market share relatively quickly, really quickly actually. And the long-term revenue source is not selling those systems. It's going to be monetizing the data that's collected from these sensors that are deployed. So the more sensors they deploy, the more data they are able to collect, and then in future monetize that data, which is going to be a huge revenue source for the company, additional revenue source for the company moving forward. Then we look at ClearAg and the agriculture and weather segment. It's going to break even soon. In the past, Iteris has spent approximately the past 3 years, they spent $25 million of their free cash flow. So they have approximately $9 million free cash flow every year from the transportation segments. And they've been plowing that into building this platform. And you're going to see this segment break even in the next few quarters by keep delivering base hits on this and signing new smaller deals, and eventually we'll sign an enterprise-wide deal of one of these ag companies, which will create great profitability in a segment that has 80% gross margins. And then lastly is Iteris has been partnering with SiriusXM, GM, and other automobile OEMs to implement vehicle-to-vehicle connectivity. So in the future, you can see that when you're driving down a street, SiriusXM will say, or something in your car is going to say there's a pedestrian that's going to be walking up here on your left. And so that's the future of this market and where Iteris is going. With that being said, with market-leading products and services, expertise in informatics, expanding gross and operating margins, booming ClearAg business, and a rapidly growing smart mobility SaaS platform, it is recommended that Iteris be added to the AIM Equity Fund with a price target of $7.95, representing a potential upside of 114.2%. When we move on to the drivers, above ground intersection detection is a huge driver for this company going forward. There are over 1.2 million intersections in the U.S. and less than 400,000 of those have signals. Of those 400,000 intersections that do have signals, less than 40%, so around 160,000 intersections, have above ground detection capabilities. And when you look at this, you can take this into personal experience. When you're at a red light and there's no cars coming from the opposite directions and you're stuck there for a whole minute, that is what we're talking about here. Signals that are time-based, and they don't use advanced detection to trigger the change in the light to be more efficient and lead to decreased traveler times. Iteris is the market leader in above ground detection with approximately 60% market share. So this represents a greenfield opportunity for ITI to continue to convert existing intersections to advance above ground detection. Additionally, especially across the Sun Belt and Florida in particular, there continues to be a plethora of economic development where new intersections are being built with above ground detection capabilities. As municipalities across the U.S. prepare themselves for automated vehicles and multimodal transportation, ITI will continue to benefit from conversion of existing infrastructure or existing intersections combined with intersectional growth as a result of development. Ultimately, over the long term, ITI believes the real opportunity is not selling these systems, but actually monetizing the data collected from them. And the second driver, the future of smart mobility infrastructure. The smart mobility market is poised to grow from its current market value of $5.1 billion to $8.7 billion by 2025, growing at a 5-year CAGR of 19%. Intelligent transportation systems lead to less traffic congestion, fatalities, and provide real-time data. Over the past 2 years, Iteris has seen a significant amount of budget reallocation take place to further drive connectivity between roadway infrastructure and intersections. ITI continues to be in a unique position to capitalize on this secular trend due to the company's ability to support the complete life cycle. ITI sensors gather inputs. ITI software analytics platforms aggregate that data and create live dashboards. And ITI also has the ability to offer traditional consulting services. Third driver is agriculture and weather segment break even. By 2050, feeding a planet of 9 million people will require an estimated 50% increase in agricultural production, along with a 15% increase in water withdrawals. In 2015, ITI saw this as a unique opportunity to leverage their free cash flow and go after this market. However, investors have not recently favored this move because it has led to shareholder dilution and limited free cash flow for the transportation businesses. But when you really look at this deeply, over the past 3 years, ClearAg has grown at approximately 36% year over year, and moving forward, it's a completely scalable platform with 80% gross margins. So when they hit scale in the next few quarters and turn profitable, that's going to actually be a boost to the company's gross margins moving forward and operating margins moving forward. And it's a recurring SaaS revenue. And so this is going to be extremely beneficial to the stock and for the long term, and the company long term. Now moving on to valuation. In order to reach an intrinsic value for Iteris, a 5-year DCF model was constructed using a terminal growth rate of 2% and a WACC of 7.96%, an intrinsic value of $4.54 was reached. A sensitivity analysis on the terminal growth rate and WACC with approximately plus or minus 50 basis points ranged from $4.03 to $5.57. Additionally, an EV to revenue multiple valuation was calculated using a blended average 2020 estimated enterprise value to revenue multiple of 2.81 times, resulting in an intrinsic value of $9.96. Finally, a price to sales multiple valuation was calculated using a blended average 2020 price to sales multiple of 3.26, resulting in an intrinsic value of $8.86. By weighing the three models 30, 35, 35, a price target of $7.95 was reached, resulting in a 114.2% potential upside. Iteris does not pay a dividend. Moving on to the risks. One of the major risks for Iteris moving forward is its dependence on government contracts. So delays in expenditures from the federal highway bill, delays or reductions in state and local funding dedicated for intelligent transportation system projects. All of those could occur. However, I think it's important to distinguish that those are delays. Ultimately, they should be converted into revenue. The second risk is it's a highly competitive industry. Competitors could adapt more effectively to technology changes than Iteris, which could result in negative effects. And the third risk, contract delays. If project delays occur, revenue could be shifted into future quarters. And again, the idea that the revenue would be shifted into to new quarters. When we look at the management team, Joe Bergia joined Iteris in 2015 as the CEO. And he's been very key in transitioning Iteris' model to a recurring revenue model. And I think this is going to bear the company extremely well moving forward. Prior to Iteris, he was the Group Vice President of Roper Technologies. And then we have the CFO, Doug Groves. He joined Iteris in 2019. Prior to Iteris, he was the CFO and Treasurer of Duocom. In closing, Iteris represents a unique investment opportunity in which I believe the AIM equity fund should capitalize on. Iteris will continue to execute on their SaaS initiatives and expand the already very large total addressable market. Thank you, and please post any questions on the D2L thread or ask on Friday's AIM call.